If you had to explain taxes to a 5-year-old, how would you do it?
I have done this. So
I was going to say, yes, you have done that.
what I would explain to 5, she was like, I think she was 6 when I explained this to one of my kids. And she was trying to understand what taxes are. And I said, okay, when you earn money, and you way to establish what earning money is, one's a part of that. And obviously the immediate reaction is, that doesn't sound fair. It's like, what did the government do? And that's a whole other conversation you can have about whether you are getting good value for your tax dollars. But fundamentally, that's what it is. You earn money, government wants a piece. Now, in US law, under the Constitution, with the 16th Amendment, only income is taxed. There are all these proposals you've seen floated out by different people talking about a wealth tax and talking about an unrealized gains tax. All this stuff is, at least as far as I'm concerned, not legal at all because it doesn't qualify as income. And there's this little niggling problem that income is not really defined anywhere, but that's an issue for the courts to decide. So that's the American system, is that when you earn income or when you receive income, you don't have to earn it necessarily because earning has its own technical meaning. The government wants a piece. Now, why do they want a piece? Because they say so. Why do we do it? Because they have lots of guys with guns who are willing to put you in a cage or possibly kill you if you don't.
That's true.
Because there is a difference. Most tax issues are civil issues, meaning the worst they can do is they can fine you and then they can go after your assets if it were to be established that you owe this amount of money, right? So they could grab your boat, they can grab your bank account, they can grab this, that, and the other. They can put a lien on your house, all that kind of stuff. So that's for civil issues, which is the vast majority. Criminal tax problems come in with tax evasion and fraud and things like that. You'll see online every so often that people talk about is like, why do IRS agents carry guns? So the ones that carry guns are the Criminal Enforcement Division, and that's what they're going after. It's people who are committing criminal offenses in the tax world rather than just civil offenses. Every once in a while, we have a big enough country that it happens often enough, but a small percentage of people will be doing criminal offenses when it comes to the taxes rather than civil offenses, even if they get something wrong. For that kind of stuff, it's like real police and real jail and all that kind of stuff. And if you were to resist arrest during all that time, you might not make it. So fundamentally, the enforcement arm of the government is there to make sure that people file their taxes. And the IRS does their own reports on this kind of stuff, and they estimate there's an 85% voluntary compliance rate, meaning that 85% of the income in the US is reported on a tax return somewhere and or is actually paid. The tax associated with that is actually paid. And they have a 15% non-compliance rate, which could be hiding income, not reporting, or just reporting and then not paying. So that's what they call the tax gap. How reliable is that 15% number? I have my doubts, but that's what they say. So that compliance pressure is really why you have to do that. And explaining all that to a 5-year-old is probably more than you want to get into.
Yeah.
But yeah. So the one sentence is, if you get income, government wants a piece, and you got to pay him. And if you don't, bad things happen. So that's it.
Understood. Looks like we have a real estate question again. Someone wants to know, how does someone qualify as a real estate professional for tax purposes, and why does it matter?
Okay, so that actually is in the course that I put up today.
Yep.
That is in Module 3, and I don't want to press play. But basically, there's a couple different criteria. So real estate professional status allows you to elect non-passive real estate status. And that unlocks a whole lot of deductions potentially. So that's why you would want to do it. And maybe not, it applies to you. And this course will actually walk you through whether you need to do this at all or not. But what qualifies you is you spend at least 750 hours on real estate activities and at least 50% of your working time on real estate activities. And that's the one that gets people the most. And what qualifies as real estate activities? It's this list. It's a real property trade or business. It's a trade or business that does any of the following with real property: develops or redevelops it, constructs or reconstructs it, acquires it, converts it, rents or leases it, operates or manages it, brokers it. The reason this status exists, which is separate from the 8 other tests for material participation, is because material participation is just you interacting with your rental property directly. These other things could be other real estate activities not related to your particular rental property. And so that's where we're able to bring in more hours. So if you're a real estate agent and you're brokering, then you are adding those real estate hours, and then that might unlock the deduction strategies for the real estate that you do own. And so you got to satisfy the hourly tests and the percentage tests in these categories, right? Along with your direct real estate property experience throughout the year. So that's what real estate professional status is. And then the reason to do it is to unlock more deductions. A couple things is that if you're an employee of a business that does these things, doesn't count. So if you are, we've got one client who is a mortgage broker, but she works as an employee. So all of her employment hours do not count towards having a real property trader business because she doesn't own it. She's just an employee. It's got to be your own business, or you're an independent person doing these things in a trader business covering these topics. You got to keep logs. This is something the IRS will ask about. Say, okay, you claim professional status, so you unlocked all the deductions. Great, let's see your logs. And they have to be contemporaneous, meaning that they don't want you to compile everything at the end of the year. They want you to have a log throughout the year showing that you were taking recordings as things were happening. So those are the qualifications for a real estate professional status, and that's why you might want to do it. It's just you can unlock more deductions and save money on taxes.
So be very careful how you do the logs, right? Because you have to do it monthly.
I mean, you really should do it. You should do it every day that you do something, honestly.
Oh, wow. Okay. Alrighty. Understood. So looks like we have an S corp salary question.